Hello, and welcome to the marketinOut.com tutorial video. In this video, we will discuss intraday periods and how to use them in the stock screener and strategy backtest tools provided by marketinOut.com. If we look at the daily chart, we can see that one candlestick or bar represents one day. We can find the day's open, high, low, and close prices for each bar. Daily charts are excellent for medium-term trading and work for most traders. For those who would like to track intraday price movement, MarketInOut provides the ability to use intraday periods such as 5-minute, 15-minute, 30-minute, hourly, and 4-hour periods. On a 5-minute chart, for example, one candlestick or bar represents a 5-minute period. On a 15-minute chart, one bar represents a 15-minute period, and so on. Periods are also known as intervals or time frames. We will use the term periods in what follows. Periods should not be confused with the date range for which data is shown on the chart. For example, a daily chart may show data for the last 6 months or a year, but one bar on a daily chart represents one day. Also, please note that the data update frequency is the same for all periods on our portal. For U.S. stocks, 5-minute, 15-minute, 30-minute, hourly, 4-hourly, daily, weekly, and monthly periods are updated every few seconds. Before we move on to the examples, please note that intraday periods are supported only for forex, cryptocurrencies, and IX exchange on the portal. Someone may need to learn what the IX exchange is. Here are a few words about it. All U.S. stocks and ETFs are traded on this exchange. It is similar to the NYSE or NASDAQ exchanges, but has a smaller trading volume. However, due to the many arbitrage trades, IX and NYSE or NASDAQ quotes are 99% the same. Therefore, if you trade U.S. stocks, you can use the IX exchange for analysis on marketinOut.com. In this case, the screening or backtesting results will also apply to NYSE and NASDAQ. Please note that the suffix .ix is added to tickers on the IX exchange. For example, AAPL.ix. Well, let's look at a few simple examples. Let's say we want to find all stocks for which the 14-period RSI has crossed 50 and the price is above the 50-period moving average on the 1-hour periods. To do this, we select the IX exchange as the stock universe criterion in the stock screener tool and add the appropriate technical criteria. The RSI has crossed 50 and the price is above the moving average. In the next step, we select hourly periods from the list of available periods. Well, let's now give the screener a name and run it. We can see the list of all stocks for which the RSI has crossed 50 and the price is above the moving average on the hourly chart. Okay, but what if we want to combine different periods in one screener? For example, let's say we want the RSI to cross 50 on the hourly chart and the price above the moving average on the 4-hour periods. This is possible with a formula screener tool that allows you to build more flexible criteria. We will use the function of converting our screener into a formula expression. This will take us to the formula screener page with the expression pre-filled. We see that hourly periods are indicated for all technical criteria. Please note that for brevity, we can also use H1 instead of hours to specify hourly periods. Let's leave the hourly periods for the RSI criterion and set the 4-hour periods for the moving average condition. Now we will give the screener a name and run it. Having opened the chart for any tickers, we see that the RSI and the moving average conditions are met on the 1-hour and 4-hour periods, respectively. Let's go back to the editing page. Another benefit of the formula screener is that it allows you to add OR conditions. For example, we can add the MACD crossed above zero criterion to the RSI condition using the OR operator. So now we want to find all stocks with the RSI indicator crossed above 50 or the MACD line crossed zero on the hourly chart. Please note that special attention must be paid to parentheses when using the OR operator. Now we add the SMA of 50 is above SMA of 200 condition to the moving average criterion using the AND operator. It will also run on the 4-hour periods. We also add a price is trending up over the last 50 days condition. Since no periods are set for this criterion, it will work on daily periods by default. Let's run the screener and open a chart for any tickers. We see that all conditions are met on the corresponding periods. It is worth noting that historical screening is also applicable to intraday periods. For example, we can set a 3-bar offset for the crossover criteria to find stocks for which the crossover event happened 3 hours ago. Or we can specify, for example, a 5-hour range in square brackets for the crossover condition. It now reads as the RSI has crossed above 50 or the MACD has crossed zero on any 1-hour bar in the last 5 hours. Please note that we didn't accidentally use square brackets for this condition, as it must be true on at least one of the previous 5-hour bars. Let's also add a range condition for moving averages. Let's say we want it to be true all the time during the last 5 hours. To do this, we add the range we need in curly braces. This condition now reads as a price above the SMA of 50 and the SMA of 50 above the SMA of 200 for the last 5 hours on the 4-hour chart. Note that we have used curly braces for this condition since it must be true for each of the previous 5 4-hour bars. Let's run the screener and see the results. We can also use the open, high, low, and close data arrays for intraday periods. For example, if we want the closing price of a 15-minute bar to be at least 2% higher than the average open and close price of the previous 15-minute bar, then this condition may look like this. Or if we want the high price to be higher than the previous bar's high, and this condition must be true for each of the last 3 15-minute bars, then the formula expression can be written as follows. Well, we've looked at some examples in the formula screener. Now let's move on to the strategy backtest tool. We see that we can use intraday periods to build criteria for opening and closing a position. Moreover, we can use the formula expressions to set these criteria. Since formulas give us more flexibility, we'll look at a few examples of how to use intraday periods to set criteria for opening and closing a position using formulas. We could use the formula from the previous example, but let's build a new one. Since we will use intraday periods, we also specify the IX exchange as the stock universe criterion. Let's say we enter the market every time the price crosses above the 7-period moving average on the hourly chart. As a criterion for closing a position, we indicate the price crossed below the 7-period moving average on the 1-hour periods. Let's give our strategy a name and start backtesting. The results page displays a report that shows how successful this strategy would be on historical data. Having opened a chart for any tickers, we see the point of opening and closing the trading position connected by a dashed line. Intraday periods allow you to specify the desired time to open or close a trading position. Let's say if we want to enter the market at the close of the 9 o'clock bar, we can use the hour function as follows. The results page shows that all positions are opened at the end of the first hour of the trading session. We can also refer to multiple bars in the hour function. For example, if we want to enter the market at the close of the first 3 one-hour bars, we can enter 9, 10, and 11 separated by commas. The results page shows that all trades are open during the first 3 hours of the trading session. It is also worth noting that if we use 5-minute, 15-minute, or 30-minute periods, we can add the minute function to specify the time to enter or exit the market. We changed the periods for the moving average condition to 15 minutes to demonstrate how this function works. And if we want, for example, to enter the market at the close of the first 2 15-minute periods of each hour, the minute function can be used as follows. The results page shows that all trades are opened on the first 2 15-minute bars of each specified hour. Similarly, the hour and minute functions can be used in the formula for closing a position. The backtester allows you to specify different periods for the criteria for opening and closing a trading position. In the last example, we saw that the formula for entering the market includes a condition on 15-minute periods, and the criterion for exiting the market works on 1-hour periods. Moreover, we can combine different periods in one formula. For example, we can add a moving average condition for the entry criteria, which must be met on the hourly chart. On the backtesting results page, we open a chart for any tickers and select 15-minute and 1-hour periods in sequence to ensure that all criteria for opening a position are met on the appropriate periods. We have considered how we can use time functions on intraday periods. Now let's return to our original entry and exit criteria and see how we can use the regime filter. Let's say we want to enter the market only if the S&P 500 index is above the 50-period moving average on the hourly chart. We can use the SPY ticker that tracks the S&P 500 and write the condition as follows. On the results page, we see that there were no trades on some days because the price of the index ETF was below the 50-period moving average on the hourly chart. In this example, our strategy works on the entire set of U.S. stocks. What if we want to test this strategy on only one or a few tickers? This can be done using the ticker function. For example, we can remove the stock exchange condition and specify only Apple's ticker. In the results, we see trades only for Apple. The ticker function can contain multiple comma-separated symbols. For example, we can add Microsoft and Meta to the list. In the backtesting results, we see trades only for Apple, Microsoft, and Meta. Please note that you can enter a maximum of 100 symbols in the ticker function. You can use the watch list condition as stock universe criteria for more tickers. As we already mentioned, we can also use intraday periods for forex and cryptocurrencies. Well, let's move on to the crypto screener tool and look at a few examples. As you can see, we can select cryptocurrencies or forex currency pairs as the screening universe. We select cryptocurrencies and add a crypto exchange criterion and a moving average crossover as a technical criterion. By default, this screener will run on daily periods, but we select 4-hour periods. As a result, we get a list of cryptocurrencies for which criteria are met on the 4-hour chart. Now let's convert our screener to a formula expression. As in the IX example, we can combine different periods and add OR conditions and a regime filter. All technical criteria available for the stock market also apply to forex and cryptocurrencies. Let's see how we can backtest the strategy on cryptocurrencies. Please note that just like the crypto screener, the cryptocurrency backtester is a separate tool. So we use the formula we just created as a criterion for opening a position in the crypto backtester. As a criterion for closing a position, we set the price crossed below the moving average on the 4-hour periods. On the results page, we see that the specified criteria are met on a 4-hour chart. So we looked at several examples of screening and backtesting on intraday periods for U.S. stocks and cryptocurrencies. Regarding formulaic expressions, you can find more examples in the Help section. You can also view the complete list of supported indicators and functions there. If you have any questions, please get in touch with us using the corresponding form on our website. That's all. Thanks for watching. Bye.